Introduce the process of bank reconciliation. So, during a period of time, you might keep a bank account. So all businesses have to keep a bank account so that they have tax records. And so this bank account shows money in on the debit side, money out on the credit side. And at the end of the month, when we balance it, we end up with a balance BD of 6580. So we think we have 6,580 at the end of this particular month. We then go and look at what the bank sends us. So the bank sends us a bank statement at the end of the month. So this bank statement, I'm just quickly checking here now, it starts with the same amount. So the bank thought we had 5 and we thought we had 5 at the beginning of the month. Okay. So we agreed at the beginning, but at the end of the month, the bank thinks we have 5950. We think we have 6580. So let's just look at the bank statement first before we start thinking about why might these two numbers disagree. So the bank statement, first of all, the debits and credits are different. So when we spend money here, for example, on the ESB, so we transferred money or we made a payment to the ESB somehow, that's put in the debit column. But in our bank account, we would have put that on the credit column, the spending money side. Now, why is it that they're on the opposite side? Well, it's because the bank and me, we look at our accounts from two opposite points of view. If I put money into the bank, I think debit, I have more money. But the bank thinks credit because they owe me more money. Because the money I've put in, they owe back to me. So that's why we look at it from a different point of view. Okay, so in this case, we have just a couple of things just to make sure we understand. So a direct debit, when the bank pays a bill automatically for us. A lodgement, I presume you understand what that is. B. O'Brien, that's going to be a check. Businesses, when they're paying bills, they tend to pay most of the time by check because there's a paper record. They don't give cash for it. So rates is a bill that we paid, so it's a tax bill to the government. Credit transfer, just so you understand, is when you transfer money or you put money into somebody else's account. Now in this case, it's on the credit column, so that means the money came into my account rather than me transferring it to a different person's account. And then the bank charged me money for the use of my funds. So that's just what a bank statement shows. Now, when we're doing our bank reconciliation, and I'll have a second video that goes through an example using the first question, but when we're doing our bank reconciliation, what we're looking for are things that are in one document that are not in the second document. So if I just have a look here, I would start, let's say, the bank account, sales lodged 2000. Does that appear in the bank statement? It is, yeah, no problem. So the bank knows about it and I know about it. So I know about this 1000 lodgement here. Yeah, that 1000 lodgement appears in the bank statement. I know about a 4,000 euro lodgement here, but that doesn't appear. So that document is missing from the bank statement. So we'll need to add that to the bank statement. And the document we're putting together, and I'm just going to show you the document that I've put at the end of your pages. So we have a template down here for the two documents we're going to be doing. Corrected bank account is putting in things that are missing from the original bank account. And the bank reconciliation statement is putting in things that were missing from the original bank statement. So if the bank statement didn't know, or the bank didn't know about a transaction like this 4,000 euro I've mentioned that I saw in my bank account, but it wasn't in the bank statement, then that will need to be put in here and it'll be added to the money I have in my bank statement. That's the basics of how bank reconciliation works. So what we'll do is, to start the question, okay, I know this is a different question here, we start by labeling all the things that are common to the two documents, and you circle all the things that are in one document and not in the other. It's the things that are circled, the things that are only in one document, they're the things that we will be using and putting into the two documents we're dealing with.